Good morning, it's Tuesday 28th of June. My name's Tom Elliott and this will be my last financial report for this current financial year, which of course ends in 2 days' time. Well, the Australian stock market is up this morning. It's up about 0.6% or around about 25 points. That was in line with a similar rise on Wall Street last night. Having said that, yesterday was a terrible day. The market was down about 1.25% at one stage. The reasons, honestly, you could go back a year in time, it would be the same commentary. Worries about Greek debt and the possibility of default, and if Greece defaults, or other indebted countries in the Eurozone, like Ireland, Portugal, Spain, Italy and so forth, will they default too? Plenty to worry about in Europe. Many people think that this Eurozone debt problem could create another global financial crisis. Now, for the optimists amongst us, James Gorman, who's the Australian head of Morgan Stanley, that is, he's a Melbourne man, but he's risen to the top of both Merrill Lynch and Morgan Stanley. He lives in New York, but he's here at the moment, and he gave a speech yesterday in which he said he didn't think a global financial crisis Mark II would result from Europe. He said that the world's big banks were much better capitalised, had far lower risky assets on their balance sheets, and of course the GFC Mark I was precipitated by a banking crisis, as so many financial crises are. So hopefully he's right and the doomsayers are wrong, but there is plenty to worry about. And you know, if you look at the stock market over the past almost 2 years now, really since around about September 2009, so it's now late June 2011, the share market has done basically nothing. It's been quite volatile. It trades between around 4,450 points and 4,900 points in the ASX 200's case, but it doesn't seem to want to go any higher than that, and when it gets to that level, it falls back down. Anyway, there's plenty of corporate activity going on. We've mentioned a number of times in these segments Foster's. The stock is still very strong, currently trading at $5.18. Obviously, the market is pricing in a distinct possibility of either a higher bid from SAB Miller or indeed for one of the other potential bidders, such as Grupo Modelo, Molson Coors, Anheuser-Busch, or Asahi of Japan, that one of them will make a counter bid against SAB Miller's bid, which is of course $4.90 a share. At the smaller end, financial services, IOOF had a bid for Deakin Financial Services. It was 75 cents a share. Deakin's biggest shareholder said that wasn't enough, and it's been lifted to 80 cents plus a 2.5 cent dividend. That's now been agreed to by the board and seems almost certain to go ahead, subject only to shareholder and regulatory approval, which one would expect won't be withheld. In the iron ore sector, there's been a curious couple of bids over the past few months. A little-known Hong Kong company called Wanam International, which of all things runs a limousine hire business in Hong Kong, made a bid for not one but two junior iron ore miners, Brockman Resources, of which it now has over 80%, and another company called Ferros. Now, unlike Brockman, whose board has caved into Wanam's bid, the Ferros board has resisted it quite strongly. And yesterday, Atlas Group, which is another iron ore miner with assets in the same part of the Pilbara as Ferros, have come up with a counter bid. It's quite complicated. They're going to put some money into Ferros, and they're going to sell some of their assets to Ferros, and then they're going to take Ferros over. So it's sort of money and assets going in one direction and a takeover going in the other. This has been designed to stymie Wanam, which already has around 18% of Ferros. Iron ore is still highly in demand, again, by a rampaging Chinese economy. Probably no surprise that both Hong Kong and Australian-based companies want to expand their holdings of assets of companies that have good acreage in the Pilbara region. And on that note, it's interesting to see that some people think Gina Rinehart, who's the daughter of mining prospector Lang Hancock, she could soon become not just the wealthiest person in Australia, but quite possibly the wealthiest person, or certainly the wealthiest woman in the world, such as the potential value of her iron ore and coal holdings. Interestingly also, she's starting to make her presence felt in Australian media circles. She's bought stakes in Fairfax and in the Network 10 group, and some people think she might be interested in helping to consolidate the AM radio industry here, which parts of which are currently up for sale. Telstra shares have been a bit weak. They finally did their deal with the National Broadband Network late last week. And although it looks great on paper, over time, $11 billion will flow from the federal government or via the NBN to Telstra. The money doesn't come in one big lump, and analysts said that they were a little bit surprised about this, and the shares fell from $3.05 to around $2.88. They're up a few cents this morning at $2.91. Personally, I've had a look at the deal. I think it's very, very good for Telstra shareholders in the long run. It gives them I think, quite adequate compensation for shutting off the copper network and handing it over to NBN, because of course once the NBN fibre to the home network is built, Telstra's old copper lines won't be worth very much in any case. Anyway, the real uncertainty with the NBN is if the Liberal coalition gets in, will they shut it down as they've threatened to do, or will they admit that it's too late to do so and let it be built? Only time will tell. That's possibly the reason Telstra shares have underperformed in the past few days. The sell-off in Greece has made a lot of people worried about risk in the markets. As a result, the Australian dollar, which is perceived by some as being a risk currency, has fallen a bit. It reached a peak of just over $1.10 a couple of months ago. Right now, it's 104.7 US cents, so it's down about 5% from its peak. And finally, and somewhat curiously, both gold and oil are down. Now, oil I can understand, because if we are headed for another recession, as some people think, oil prices you would expect to fall because people drive less and transport companies consume less. But normally when people are worried about things, they tend to turn to gold. However, at the moment, gold is down from $1,540 over the last few weeks to just $1,498 US an ounce as we speak.